How diversified should an investment portfolio be? Today, we are going to take a look at my investment portfolio. Hello and welcome. My name is Peter B. and I welcome you here at My First Million, where we are achieving our financial goals together. So today, we are going to take a deep dive into my investment portfolio, how it currently looks like. But just as a caution here, this is only for entertainment purpose and information purpose. This is no investment advice. Everyone needs to make his or her own decision on how they want to allocate their money, in what kind of investments they want to be doing, what they feel comfortable with, and also therefore are able to cover the risks if there are any. So this as just as an introductory advice. Then also, what's diversification? Diversification is basically you take the money that you have and put them into investments, but not in one investment, but into different investments. So that if you're facing any investment risks, that maybe one of the stocks is defaulting, or maybe a business is failing that you have invested in, that not your whole amount is lost. So with diversification, you are basically diversifying your risks so that if something would happen, you will not lose everything at once. So how does my portfolio look like? Again, this is no investment advice, just for information purpose only. So these are the asset classes that I am invested in. You see that a very big chunk of my net worth is invested in real estate. And I think this is something very commonly that you would see if you hear someone is investing also in real estate. Because as soon as you buy your first property, most likely a big chunk of your investments get allocated. Especially in my situation, I think real estate was one of the first big investments I have been doing right after graduating from my university, and soon after I was already investing in real estate. So naturally my allocation towards real estate is pretty big, and over time though, throughout the past years, it has been getting a little bit better and better. So I'm getting more diversified. But just as a general concept, if you're investing into specific real estate properties, potentially you will have some allocation risks there, some market risks there. And so do I in my portfolio. Then you see the second biggest chunk here is stock market. In general, I like to invest into the stock market. I also have a pretty considerable amount in cryptocurrencies, and I'm holding, of course, some cash as well for both emergency fund, but also for investment opportunities. But you don't see maybe what you generally would be seeing in many investment portfolios are bonds, or like a bonds. But I currently don't have any investments in bonds. I used to have a small percentage allocated in some specific corporate bonds, but I don't have it currently. So let me dive in a little bit deeper into my cash position here in the blue position and show you how this is distributed. So these are my current cash holdings. I'm living in Taiwan, and also my main income source is my salary that I'm earning here in Taiwan. So therefore, naturally, the biggest chunk from my cash positions are in Taiwan dollar. Then, as I'm a Swiss, I also still holding quite a big amount in Swiss dollar, in Swiss francs, and through investments, I also have now currently a small position in US dollar. So these are the three currencies that I'm currently holding in my cash positions. But this can fluctuate quite a bit depending on whenever I'm considering adding maybe an additional stock to my investment portfolio, or sell out of a stock. from my investment portfolio. So this is how my cash is currently distributed. And you see there's also like a regional attribution across the globes. Some is in Taiwan dollar, more Asia Pacific related. Some is in Swiss francs, I think, which is usually a stronghold currency in Europe, also called as a safe haven, and then some US dollar as the globally main currency. So then the next section is cryptocurrency. Again, just for cautious reason, this is no investment advice. You need to know what you're doing by yourself so that you can stand for the risk that you're taking. But you can see my biggest chunk in crypto is just one currency. Then I have 3 bigger positions in 3 more minor altcoins, and a few very small positions where I'm just trying to learn more and study more and get some exposure there. So of course the biggest position, you might guess it's Bitcoin. I am quite a Bitcoin believer, but again, not an investment advice. You need to understand it by yourself and therefore also need to be able to take the risks accordingly. I feel like with around 6%, around 5% of my portfolio in cryptocurrency, I feel my exposure is pretty well allocated. I don't want to have too much either because it's still a new asset class, and therefore there is of course quite a lot of risks. And I can understand that many people would prefer not to put some money in risky asset class like this. And so if you consider a crypto asset, maybe you also want to consider what should be the cryptocurrency percentage that you want to allocate into cryptocurrency. And just according to the risk, at least I wouldn't make it too big. But of course, again, this is everyone's personal individual decision. Then the second biggest area, which I haven't covered yet, is the stock market. How does my stock market investment look like? Here you can see that the biggest chunk of my stock market investments is in individual stocks, and a small percentage is in stock market ETFs. So this, I would say, is potentially one of the biggest mistakes I have done in my investment career so far. I would like to have a much bigger allocation into ETFs, but not just take my money and throw it into ETFs. But what I'm doing with ETFs, my strategy is dollar cost averaging every month a specific amount into ETFs. But the mistake that I have been doing was that I started way too late to start investing into ETFs. So it's running for a few years now, but ideally I would have started to invest into ETFs as soon as I at latest graduated from college, or even before that. And if I would have done so with a dollar cost averaging method right after college or after I get my university degree, this portion would be much bigger. So this is probably the thing that I would wanted to have to change the most. Talking about ETFs, I like to have a global positioning here. And basically what my wife and I are doing is we both do dollar cost averaging into ETFs. My wife is just investing into Asia Pacific focused ETF, and I for myself with the positions that I'm still having in US dollar and Swiss francs, I'm just dollar cost averaging into 3 separate ETFs. I don't use a global stock market ETF because I think from my perspective, the global stock market would have a little bit too strong exposure into the US stock market for me, especially because we are living in Asia Pacific and also have roots in Europe, in Switzerland. So therefore I want to have also allocate more towards Europe and emerging markets, especially because I feel like also that the markets there are less overvalued than compared to the US stock market. But of course, this again is my individual conclusion of analyzing the markets. So I personally invest into three stock market ETFs, one focusing on the US, one focusing on the European markets, and one covering all the emerging markets. And the Asia Pacific one, again, is the one that my wife is dollar cost averaging in every month. Coming back to the stock market overview, you see a big allocation there is I'm investing into individual stock. This is quite a big hobby of myself, to really analyze stocks, to get familiar with the business models, to understand where they want to be going. But not only that, also I like to do deep dive into a company's financial positions. I like to analyze the balance sheet, the cash flow statement, and also of course the profit and loss statement, and see how well companies are doing. And then compare those into the current stock evaluations that the company is getting on the stock market, and I love to try finding undervalued stocks in the stock market. So this is just a hobby of mine. So I think for investing into individual stocks, you need to have quite some passion there, and also bring in some time, to spend some time that you spend on really analyzing the details of each stock that you're investing in. So how does my individual stock portfolio look like? You see here again, I think this is very diversified, and I think many people investing into individual stocks would say it's way too diversified. You see, I currently have investments into 45 different stocks, whereas maybe my top 10 positions cover more than half, and the bottom 35 position a little bit less than the other half. So again, this is potentially a result of me taking a look at many different stocks and spending my free time on it to find some investment opportunities. And my strategy is potentially very different than many other people. But first of all, I like to have some diversification even within my individual stocks investments. And second, I also like to build up maybe some explorer positions, so that I just keep on track on a company, and then decide over time whether I want to build up a position bigger into a major position, if my belief is getting stronger of the company's success, or if I want to remove it out from my portfolio, if I see that maybe it's not really covering my beliefs of how well the stock will do over time. So in general, you can just see the bigger the position is, it's also my belief that the risk reward potential of this stock is more solid. So it's always, if you invest into individual stock, it's also always a risk reward trade-off. So if you have something very low risk and very high reward, of course you want to put more money into these situations. When the reward is getting lower, of course you want to put less money in. And again, if the higher the risk is getting, the less money you want to put in. So that's how I try to evaluate my my allocation of capital within individual stocks. So then also give you some insights on the geographical distribution. This is currently how my geographical distribution looks like. It looks pretty similar like my ETF distribution. Bigger portion, or the biggest market I'm investing in, is the USA. A lot of information of US stocks are available, and therefore it's a pretty easy market to invest in. But again, if you take a look at a global allocation, I potentially have the North American market quite underweighted. This, in current, I think global market should be around at least quite a bit over than 50%, potentially even more than 60%. What you also can see is that I have quite some home bias here. So my Switzerland allocation is pretty big. So is my Germany allocation, because I'm a German native speaker. So I'm more easily able to find information about German companies compared to maybe other investors. And as my wife is Taiwanese, of course, she has the same for Taiwanese companies and is able to understand and gather information from Taiwanese companies that are maybe more difficult if you're just English speaker. So there is some home bias here, but at the same time, for me personally, I think having at least some home bias in your stock market portfolio is not really a bad thing, because it means you are also maybe having information that maybe a global investor doesn't have. And then you see, besides US, a very small position in Canada, I also have some investments in France, Great Britain, and Poland. And the Hong Kong portion is mainly Chinese stocks. And the only reason why I put it at 12, nearly 13% is because I think in general Chinese stocks are very undervalued currently. But again, not an investment in my advice. It's just my own elaboration of the situation. But again, it could also be more risky. There's a reason why the Chinese stocks are so cheap. And this is mainly political issues or political reasons. Then take another vantage point on my individual stock investments. Here I also listed out what percentage goes into different industries. You can see a big chunk. The biggest chunk is in retail and e-commerce. I put these companies together, but mostly it's more e-commerce focused than retail. So that's currently maybe my biggest industry allocation. I also have quite big allocations in automotive, healthcare, IT components, and again some real estate related industries. It's not really real estate by itself, but more like in the like a building companies, or like a real estate building material companies where I have some exposure to. And there are a bunch of other industries that I'm also having, I'm also covering in my investment portfolio. So to sum this video up, I hope I could give you some insights on how I am distributing my risks within my investment portfolios. But again, it's each person's individual choice on how heavy you want to be allocating your money into the different investment categories, and also then within the categories into single investment opportunities. And still, I'm wondering, I'm still would like to get your feedback. How do you think about my investment allocation? I'm looking forward to get your feedback. Please write it in the comments below, so that I also can maybe take into consideration if I should be focusing, if I get some feedback like I'm underweighting like a specific industries, or I'm too risky in some areas, or potentially too over diversified or too under diversified in some areas. I look forward to hear from you, also to see what you are doing with your investment portfolio. Thanks a lot for joining me today. I look forward to see you in the next video, and especially I look forward to see you winning financially.